Assalamualaikum and hello. Today we are going to explain about Malaysian property bubble. Prepared by Farzana Farhin binti Nasahruddin, Ruhil Nadirah binti Mohd Hilmi, and Ain Nurlisa Bt Safian. Now, let's see. What is property bubble? A property bubble or real estate bubble is a run-up in property prices fueled by demand, speculation, and exuberant spending to the point of collapse. It usually starts with an increase in demand in the face of limited supply. At some point, demand decreases. At the same time, supply increases, resulting in a sharp drop in prices. That's when the bubble bursts. So basically, a property bubble is an increase in the property prices due to the high demand but very limited supply.
Causes of property bubble. First, rapid increase in demand. When the demand for a house is too high, it will cause the price of the house rising. Second, low in supply. This situation is due to the high demand. Third, decrease in interest rate. When the interest rate is low, the bank easily lend to the borrower to make a loan. Factors of property bubble. First, interest rates are too low. The basic formula in housing lending or financing is when interest rates are low, monthly payment will be also low. At the same time, housing loans are easier to pass. Second, leveraging too much. This means home buyer useful or 100% loan from bank without having to spend their own money. Third, non-performing loan increasing. When more and more people start to fail to pay their loan in time, this loan will soon become a non-performing loan to the financial institution. It is possible to ask our friend if they have been failing to pay their mortgage. Last, house prices are too expensive. Property bubble means a sudden and rapid rise in house prices. One of the indicators that you can see if the house price in Malaysia are rising rapidly is by comparing them with rising wages.
Impacts of property bubble if it bursts. Firstly, unemployment and create a loss of value to the owner capital. Unemployment, it affects directly to the construction industries. When the demand is low but the supply is really high, then the construction industries needs to slow down. This can cause a lot of workers to lose their jobs. Create a loss of value to the owner capital means that when the owner wants to sell their house, they have to sell their house below the price of when they buy the house. This can create loss to the owner itself. Secondly, many people are forced into bankruptcy. This is because they are struggling to pay the loans and interest rates to the bank. Thirdly, send the overall economy to recession or depression. And the last one is the mortgage supplies would decrease. The burst of the property bubble can force people to find ways to keep up with their mortgage payments when the times suddenly turn and get tough. Some may even have to dig deeper into their pockets using savings and retirement funds just to keep their homes.
What is the best way to navigate a property bubble for Malaysians? Firstly is renting. If the market is currently in a bubble, it's wise to adopt a wait and watch approach and to continue renting in the meantime. This puts the power back in your hands and gives you the flexibility to choose the right time to buy your own property that is best suited to you and your financial needs. Secondly is broadening your search. If you're still keen on finding your dream home during the housing bubble, then consider expanding your location preferences. Suburbs and far-flung areas may still be within your budget and may prove to be a blessing in disguise. Third is taking a step back. If you have not managed to land your dream home after months and months of house hunting, then take a step back to reassess your strategy. Taking some time away from a market in the throes of a housing bubble might turn out to be the best decision you make. And lastly is opting for an older property. While more recent properties may require less maintenance, older properties are often more spacious. Be sure to do your research and ask the right questions, such as about the home's history, so that the cost of renovations do not exceed your budget. What are the government initiatives to control property bubble? Firstly is tighten housing loans. According to the chairman of Real Estate and Housing Developers Association Malaysia (REDA), as many as 62% of units of property were not sold in 2016 due to most loan was not approved by banks. In this case, Bank Negara is trying to control the purchase of real estate so that Malaysia is not trapped in a severe housing crisis. Secondly, is increased supply of affordable housing. This is the initiatives of federal and state government. One of the housing made by the central government are Rumah Prima, Program Rumah Mampu Milik SPNB, Program Perumahan Penjawat Awam 1 Malaysia, and Program Perumahan Rakyat. Third is control of interest rate. Bank Negara has always tightened the interest rates imposed by banks in Malaysia. However, there are few times Bank Negara changed its interest rate. These activities depend on the current economic status. In conclusions, the housing prices in Malaysia have been on the rise from the year 2009 to 2012, but noticeably with slower growth in recent years. At the same time, there have been anticipation and expectation on the occurrences of the housing bubble in the residential market in states like KL, Johor and Penang, where the housing price has been growing positively at exponential rates. The cycle follows the trend observed in other developed countries, where the cycle usually reaches its full swing within 8 to 10 years. The property cycle shows that Malaysia is experiencing boom phase starting from the year 2009 to 2012, but expects to slow down afterwards. As such, Malaysia is not supposed to be experiencing a full-blown housing bubble, since it was still in the boom phase up to the year 2012. Therefore, the ratio analysis shows that the occurrences of a housing bubble are not significant at the national level, but only show traces at the micro level of certain states and housing types.